In this video, I'll show you how to use Phemex Crypto Exchange. I'll show you trading in the spot market. I'll show you margin trading and also futures trading. What are the differences and how to go ahead and open and close positions and everything else. So if you haven't got an account yet, go to the website. I'll leave the link below. Now they give bonuses for new users. So you can get deposit bonuses, trading volume bonuses, and sometimes they also run VIP tier bonuses as well. So new users go into VIP tiers, you get lower trading fees and some other bonuses as well. That does change over time though. That link will get you the best bonuses at the time that you're watching this video if you are new and signing up. You just need an email address and a password and then you can open your account. Once you've opened your account, you may want to go through with ID verification. So top right hand corner, this icon, then go down to verification here. Basic means your name and an ID number. You can deposit and withdraw crypto and you can trade. If you want to deal with fiat currency, so deposit cash, then you have to do advanced verification, which is showing them your ID document and doing facial recognition. So either on the Phemex app on your phone or if you've got a webcam on your computer, you need to match the ID that you're giving and then you can deposit fiat. Just make sure that you know all of the rules around that and the limits and everything else. Most people use Phemex as a crypto-only trading exchange, so you probably have a different on-ramp like Coinbase or Kraken or something like that. Then you can send crypto into here to trade and out again. Fees are lower on Phemex, which is why people use it. Spot trading fees start at 10 basis points on trade volume, which is in the ballpark of lowest trading fees around. So that's spot trading. If you trade contracts, which is futures trading, then much lower. You're looking at 1 basis point if you're using limit orders, and then 6 basis points if you're using market orders. I'll explain that later in the video, but yeah, amongst the lowest in the industry. Phemex do offer a fiat currency on and off ramp through a partner called Legend Trading. For USD, they say they only accept local USD deposits. So if you're outside the US, you can't use Swift to deposit and withdraw USD. There are other currencies supported: pounds, euros, Swiss francs, Japanese yen, Aussie dollars. Depositing cash in, you have to do your KYC, make a deposit, come up here, press deposit. You will get the bank details that you send a bank transfer to. From there, your bank account will be added. Now, your bank details and name and everything has to be the exact same as the KYC details that you give Phemex in the previous section that you saw in this video. You have to do your KYC there. Once you deposit cash into the bank account, you now have cash. You need to switch that into a cryptocurrency, either directly into the currency that you want to buy, like Bitcoin, or into a stable coin like USDT or USDC. That has a charge. You can see for low volumes, it's 2%, and then it gets cheaper the higher volume that you're putting in. Once you've made a deposit in, that bank account is linked, and then you can come up here, press withdraw, switch your cryptos into the fiat currency that you want, and then it will only let you withdraw to the bank account that you used previously to deposit in. If you're depositing in fiat currency, you have to switch that into crypto within 30 days. So go into your wallets here, go to account. You can see all your different accounts here. Any of these is going to bring up this page, and on the left-hand side, you can go to your different accounts. You can see the fiat account here. You can make fiat deposits on the right-hand side. It's just going to give you their banking details. You can send a bank transfer over to their bank details. Then you'll get your fiat account with a balance. And as it says here, you have to transfer that into a cryptocurrency within 30 days. You can, of course, withdraw it as well if you want. But you're going to have to switch it into one of the cryptocurrencies that you want to use. So that is going to go into your spot account. So spot account is crypto that you own, USDT, Bitcoin, ETH, and all of the other coins that's supported on Phemex. Now, you can also trade in the futures market, and you can use margin as well, which is where you borrow money from the exchange to trade with, and you can trade with more than you have. I'll go through all of that in a second. But if you want to transfer assets between all of these accounts, within this page, come up here to transfer, click that. You can transfer any coin from any account to any other account. So let's say that you have some assets in your spot account, but you want to trade in the futures market. Switch from your spot to futures, choose the amount, press confirm. That switches the assets over. The reason you have different accounts is because these are different products, different markets. So we want to segregate all of our different trades in those different markets. You don't have to on and off ramp cash through Phemex's system. If you're in a G7 nation, you may find it easier and even a bit cheaper to on and off ramp through something like Coinbase or Kraken, which tend to have really good banking links in G7 countries. And then from there, you can just switch into a stable coin like USDT, send the stable coin over to Phemex. The reason being, Phemex's trading fees for spot and futures and margin are cheaper than those exchanges, so you get cheaper trading fees here. So you can deposit crypto in. I'm in the spot trading screen here, but any screen that you're in, you can just press this deposit icon in the top. So click that and it says what you want to deposit. I can deposit in some crypto. So if I on-ramp through Coinbase or Kraken, switch into USDC or USDT, then I can send that stablecoin very easily over to Phemex, and then I've got that value to trade with on Phemex's system. I'll show you an example of sending crypto from one exchange to the other. So we've got USDT here. You can transfer in any of the supported currencies, but I've got USDT to trade with, and I'm going to send that over the Binance Smart Chain. That's because I know the fees on this chain are pretty cheap. I'm going to be sending it over from a different exchange. So this is my deposit address for USDT on the Binance Smart Chain. So I'm going to copy my address here, go over to my other exchange. From here, I have to send USDT. And because my deposit address in Phemex is the Binance Smart Chain, that means I have to send it on the Binance Smart Chain. So I'm going to search for the coin here, USDT, and I'm going to send it out. So withdraw to, enter the address. That's the address that I copied. This is my Phemex address for USDT on the Binance Smart Chain. So now I just have to choose sending it over the Binance Smart Chain right here. So I'm going to be sending that USDT over Binance Smart Chain to my Phemex address. Now, if I chose a different network, so for example, if I chose ETH right here, I just have to make sure that if I'm sending USDT on ETH, that I'm sending it to my Phemex ETH address. Back in Phemex then, what I would do is make sure that I can receive USDT over the ETH network or Ethereum. So what I have to do is press USDT and ERC20, that's Ethereum. So I'm going to click that and it gives me my deposit address right here. So I've got my deposit address for USDT now on the ETH network. So copy that, go back into your exchange, and if you want to send it on ETH, you can. Wherever you're sending it from, and whatever network that you're using, just make sure that you can accept it on that network within Phemex. That works for every currency. So that's how you deposit crypto into Phemex. Now I've got USDT, I can switch that into any other crypto. Now I'll show you trading in the spot market on Phemex. Spot here, spot trading. Now, because I deposited that USDT in, you should be able to see down here that I have a balance of USDT. I can switch this into other cryptos that I want to trade. So we can go to the top left, and this is where we choose the cryptos that we want to trade. So I'm in the spot market. I can search up here for Bitcoin. So BTC is the ticker. In the spot market, there are different trading pairs. This is Bitcoin against USDT. You can also trade it against USDC. Two different stable coins, but they're two different markets, right? You can search for any cryptos here, and we've got all of the spot trading pairs up here. You can see spot. This is futures. It's a different market. We'll get to that in a second. So choose whatever asset that you want to buy, and most of these assets are going to be paired with USDT. So that's the dollar equivalent that we trade with. So what we're looking at is Bitcoin against USDT, which means this is Bitcoin, and how many USDT does it take to buy 1 unit of Bitcoin? Now we can trade any fraction. That's the quote that we're getting, right? So when we look at the price, this is the price here. This is the order book. What this says is for 1 unit of Bitcoin, it takes $115,000 or USDT, because that's what we're actually trading. So that's the price right here. And above here, these are sellers, and we've got buyers down here. So these buyers are bidding. They're showing their orders to the market. They're willing to purchase at prices 114, 978, 975, 970. So they're showing their limit orders to the market, saying we're willing to buy and pay this price. These are sellers of Bitcoin up here, trying to take higher prices, saying we're offering Bitcoin out at 115,097 and so on. When they meet in the middle, that is actually a trade. That's the mid price right here. So that's the actual price that Bitcoin is trading right now against USDT on Phemex. This is, of course, the price chart as well. So the way the price chart works is you have time along the bottom, price on the y-axis. This is the daily chart here. So you can zoom in and out. Each of these candlesticks is 1 day in length. So that's the price action for that day. So a green candle is an up day, so the price moves up during that day. A red candlestick is when the price moves down during that day. So you have an open price and a closed price. If the close is below, that was a downward move in the price. It gets colored in red. And then obviously an upwards move is you open and you close higher, so that's a green candle. And so each and every day, those candlesticks change. You can move the time horizon on the candlesticks here. So if we go to W, then each of the candlesticks is now 1 week in length. So it's a little bit of a different chart, as you can see, because the time frame of these candles is now 1 week instead of 1 day. So you can see we're definitely in an uptrend. And these will be on automatically, which are the moving averages. So that's the moving averages of the price. That's smoothed out over time. And of course, a 7-period moving average means 7 weeks in this case. 14 is 14 weeks because we're looking at the week chart. 30 is 30 weeks, which is more smoothed out. So you can see that they're all pointing upwards, obviously a big uptrend for the price. And the shorter period moving averages, they're going to be following the price more closely. The longer you get, obviously they're going to be more smoothed out over time. When you trade, you can use either market orders or limit orders. A market order is where you choose the amount that you trade, but not the price. So if we're using market order here, you can choose the amount that you spend. So I can say, I want to spend $100 or $10 or whatever it is, or USDT. It will go out into the market here, and it will trade with the cheapest seller for us, which is whatever this price is. This is the lowest seller, lowest priced seller. So we'll trade with them, we'll take their order, and we'll take the amount that we want. You can also choose a BTC amount or any of the cryptocurrencies, which is a decimal. So 0.000, whatever it is, right? You can choose that, but it's a lot easier just to say, I want to spend a dollar amount or a stable coin amount, and then you can go ahead and trade. So this market order will trade immediately because we're just saying, buy me $10 worth at the best possible price. So we'll go ahead and do that, press confirm. That will trade immediately. So you can see active orders here, and then that will go through and trade. That's a market order, so it goes through immediately, like you can see. We can also choose the price that we trade at by setting a limit order. So we join these people. Now, if we're a buyer, then we can go down here and we can choose limit. And now I can choose the price that I pay. So again, I want to choose the amount that I want to buy. And now I can choose the price that I pay. Let's say that I want to pay 114,800. So what I'm saying is I want to buy $10 worth of Bitcoin at the price per unit of Bitcoin of 114,800. Now you can see the market price is above this. So I'm not going to trade straight away because there are people willing to pay more than me for Bitcoin. So no one's going to sell me Bitcoin at this low price when other buyers are willing to step in at a higher price. However, we can put the instruction into the system. So I'm going to go and buy BTC again. This is my limit price. So buy, confirm, and you'll see that the order comes down here now. This is an active order, but it won't trade for us. The reason being is that our limit price is too low for the market. However, our order is down here on the order book, and it's sitting there waiting for a seller to come in and trade with us. So if the market price falls, we will be there, and if someone is willing to trade with us, then we will buy the Bitcoin at this price. But because this is our limit, we can't trade at a higher price. We're telling the system only trade if our limit is matched or if it's better than that. You can change this as well, so you can edit the price here. You can edit the price, the amount, anything that you want. So that's just going to work for you the whole entire time. And what we can do is cancel this out. So this cancel order, if you don't want to go ahead with the order, down here as well, you can see cancel all. So you can cancel that order as well. Now, if you cancel it, then that order no longer remains in the system. You didn't pay anything. You only paid trading fees when you actually exchange assets. So that didn't cost us anything to put the order in and cancel it. But that's how you can put a limit order in, and then you can wait for the market to move around to the price that you want to pay. If you want to sell crypto, then just switch the tab over to sell on the right hand side. Now also be careful of which currency that you want to switch into. In Phemex spot trading, the trading pairs are USDC and USDT only. These are US dollar stablecoins, as you can see here, which is totally fine, but it means that we're selling, for example, Bitcoin into USDT. I can do this and I'll show you an example. So sell, I'll just sell with a market order. I've got an amount of BTC, so you can say how much that you actually want to sell here, no problem. And then I'll press sell BTC. This is a market order, so it will go through straight away, and that will switch into USDT. That's fine if you want that, but you can't off-ramp USDT from Phemex, right? So if you want to off-ramp, you have to go through to the fiat off-ramp screen. You'll need to go over to one-click buy sell. That's actually in buy crypto here, one-click buy sell. Now, if you want to off-ramp, you need to sell, choose the asset that you have, and it's going to give you an exchange rate into the fiat currency that you want to switch it into. However, the trading fees are higher here. So that's just what it is. And there's no point selling Bitcoin into USDT to then sell USDT into USD. You can just do the drop down here, choose an amount of BTC that you want to sell directly, and go into USD if you want to off-ramp all the other fiat currencies that are supported. Just make sure that fiat currency withdrawals are supported for you. Nothing gets held up through your KYC being different or anything like that. And any limits, just make sure that they're okay for you to be depositing and withdrawing the amounts that you want. Now I'll show you margin trading, which is where you only have to put down a small percentage of the trade size that you trade. So an example of this would be, let's say 10x leverage. That means that if you want to trade $1,000, you only put $100 down to fund that trade. And that $100 there is to pay for any potential losses in the trade that you take out. So if you trade $1,000, then you do trade that with the market. And if the price moves, you either make a win or a loss on that $1,000. You've got $100 there to fund that trade, which basically means funding any losses. If you make profits, no problem. But if you're making losses, then that's what you have to fund and pay for if you're making the loss. So obviously with 10x leverage, if you are trading a $1,000 trade, and with 10x leverage, that means you have $100 in to pay for the loss. Well, a 10% move in a $1,000 trade is a $100 loss. So your money that you used for that trade is going to get wiped out. So that shows you that using leverage essentially makes profits and losses much bigger and faster in comparison to the amount of cash that you have tied up in that trade. Margin trading is where you borrow money from the exchange, they cash settle for you the trade size, and you only put a small amount down initially. And so you can go to spot here and then margin trading, but you're trading in the spot market and you're just trading on margin in the spot market, which means the exchange is cash settling that trade for you because it has to do that. And then you're putting less down. You can just go into the spot market, go over here to where it says cross 5x, and that changes into margin trading. 5x leverage means whatever trade size that you have, you are funding 20% of it, right? Now, you don't have to trade with more size than you have. If you have $1,000, for a 5x leverage trade would be $5,000. You don't need to do that. You can trade, for example, with, let's say, a $1,000 trade and you have $1,000 cash, but because you're using margin, you're only putting 200 down to actually open the position. Now, if you wanted to, you could actually just pay off the margin completely because you've got the cash to do so. You can pay off the margin and just finish the trade and buy the trade out. So that's what margin is, right? You're just borrowing some money to open that trade initially. You don't have to fund the whole thing at once, but you can fund the whole thing later and just pay off the trade if you want with cash because we're in the spot market. If you don't want to do that, all you have to do is unravel the trade. If you're a buyer, you just unravel with a sell, and then whatever the profit and loss is from when you opened and closed, that will be exchanged in cash. So if you made a profit, you'll just get extra cash. If you made a loss, then you will be paying for whatever that loss is. You're going to have to transfer some funds into your margin trading account if you want to trade in margin. So come down to the bottom. I think you have to enable margin trading as well here. Read some terms and conditions. And then, as you can see, we want to transfer some assets over. So from the spot account into margin trading, right, we can just confirm that. So now we have some assets in our margin trading account. The Phemex margin trading system has auto borrow, which means that it's going to borrow the amount necessary to open the trade size that you want. So if we open a buy order here and we open a market order, see the auto borrow here. Let's say that I want to open a trade size of 50 USDT. You'll notice that it's borrowing 0. That's because I have $100 in my account, so I can open this trade without having to borrow. If I want to open a trade size of $200, that means that I have to borrow $100 because I've got 100 and I need to borrow $100 to open that trade size. But I can open this trade size. Now my $100 is here in order to pay for any potential losses. Now if I'm opening a $200 trade size, that means that I can fund 50% of this position. So even though it says cross 5x, right, really, because I've got $100, the effective leverage that I'm using now is 2x, which is 100 times 2, $200 trade size. So I can open any amount that I want. The max leverage that I can use is around 5x. So if I put this right up, I can borrow it around about $500, right? So that's 5x is the max leverage. But of course, you don't have to use that. So if I'm opening a trade size of 200 and I've got $100 cash, the effective leverage that I'm using is 2x my cash. $100 to fund, $200 position, 2x leverage that I'm using. So I'm borrowing $100. So let's go ahead and do this. So margin buy. You can see this, I'm borrowing $100. Now, because I'm borrowing money to open this position, I also pay an interest rate that is exchanged. So you have to keep that in mind. The interest rate can change over time, dependent on supply and demand. So if demand is very low, the interest rate is going to be low to borrow. During a big bull market and the price is rising a lot, you may find that borrowing costs go up as well. So keep that in mind when you're opening positions like this. So we can see the total debt is $100, right? Because that's what I need to pay off essentially. Total margin balance, $200. I've got 100 in cash, so confirm. and then we can open that margin position. When you trade on margin, the only thing you have to worry about is being able to pay back the thing that you've borrowed. So I've borrowed USDT. If I want to now pay off this loan, I just deposit USDT into the platform, and then down here you can see there's an option to repay. I can repay the loan because I've just borrowed 100 USDT. If I repay the USDT, what I'm essentially doing is paying off the loan and keeping the Bitcoin. I now own that Bitcoin. I basically borrowed 100 USDT to buy BTC. That $100 I'm on the hook for, right? So I can repay that USDT, and what that does is reduce the loan. It doesn't change my Bitcoin position. I still have the Bitcoin, right? So that's the only thing we have to worry about, is the thing that we have loaned is the USDT in this case. You can see my positions here. I now have a position of Bitcoin which is worth $200, and I have a debt of $100 that I borrowed. With margin as well, it's going to constantly calculate your net position. So if I borrowed $100 to buy a Bitcoin, which I did, Bitcoin can go up in value. And that means that essentially I now have equity in my account that has been created because the Bitcoin value is now significantly higher than the amount of money that I borrowed to buy it. So because you have that equity now, you can sell off some of the Bitcoin, essentially taking profits out of the position to sell, to pay off the loan that you got. Then you can reduce the amount of the loan that you have, and that is going to reduce your leverage. Because the leverage is simply how much did we borrow versus the cash that we can pay. Right now I'm 2x leveraged, but if I pay off half the loan, then the leverage in relation to my assets and cash is going to go down. So that's how you pay off leverage. There's two ways to pay off this loan then. The first is just depositing more USDT into the platform and paying off the USDT. Then we keep our Bitcoin position, we pay for the position. The other is to get out of the entire thing, sell the BTC, and that's going to give us the vast majority of the money we need to pay off the loan. So if we've made a loss in our long position, we've bought Bitcoin here. If we made a loss in our Bitcoin, then that means that we're not going to have enough money to pay off all of the loan that we took, because we have $200 Bitcoin position and $100 of borrowing. So if the Bitcoin price falls, we're going to have a shortfall when we sell back into USDT. However, if the Bitcoin price goes up, then you can sell off the Bitcoin, pay back the loan, and pocket the difference from the trade. So what we're going to do is repay. So I'm going to repay the USDT here, like this, and it says, how much do you want to repay? Right, so we're going to repay here, USDT. You can see that I've got an available balance here in USDT. That's all I've got. I just put a little bit into the margin account just to show you. So that's my free cash that I can pay off. So I just added this in extra. So I can use that to pay off some of the loan, and that will reduce some of the loan, essentially paying back some of the position. So if you want to do that, you can do, press confirm. That doesn't change my Bitcoin position at all. We can also cash out and sell some of our Bitcoin position. That's going to release some USDT back into our account. Now you can press auto repay here, and that auto repays the loan that we just took to open our position. So I'm going to sell, auto repay, sell an amount of Bitcoin. So let's say this much. And what this is going to do is sell and then pay off some of the loan. So sell BTC like this. You can see it pays off some of the loan. So I press confirm, that will go through, and then that will reduce the amount of USDT that we're on the hook for. You can see that that repays the loan right here. Now, as long as we made a small profit in the Bitcoin position, we'll basically sell out of the whole thing and keep that profit. If we made a small loss, then essentially what we've done is made a small loss on our Bitcoin trade, and we have to fund that as well because it's not going to be enough to pay off the loan that we took. So I'm going to auto repay like this, just press all here, and hopefully that should pay back all of the USDT loan. So now again, what we have is two positions, which is our USDT now, which we have back, and we have a tiny position of Bitcoin which is still there, which is irrelevant. We're not borrowing that, we just paid off the loan essentially, but we have small amount of Bitcoin in the account as well from our trade. With margin, you're borrowing money from the exchange to trade in the spot market and cash settling in the spot market when you trade. With futures, this is a completely synthetic product. It just matches the price of certain crypto trading pairs, but we're not trading the crypto at all. We're just trading the price. So you open a position and you close a position, and you either make a profit or a loss. So if we come to futures, you can see this one here is what most people trade, which is US dollar margined. which USDT margin, as you can see here. There's also USDC margin if you want to use USDC. With futures, like margin, you put some money in your account to pay for losses, and then you can open up any trade size that you want, really. So if you've got $1,000 of cash, that's there to pay for losses. Then I can open up a $1,000 Bitcoin position, $1,000 ETH position. That's $2,000 in my net position size, and I've got $1,000 there to pay for any losses. So we can use leverage if we want, but we don't have to. Leverage is the amount of trade in size that you have versus how much cash you have to pay for it. So if I've got a $1,000 cash position and my trade size is $2,000, I've got 2x leverage on my cash. If my trade size is $5,000 versus $1,000 cash, that's 5x leverage. 10x leverage is a $10,000 trade size versus $1,000 cash. The only thing we have to worry about here is making losses, because on 10x leverage, a 10% loss wipes you out. In 2x leverage, you can afford a 50% loss and still pay for that position before you get wiped out. So the more leverage you take, the quicker you're going to get wiped out to the downside. But of course, then you make larger profits to the upside in relation to your cash if they come as well. So you can use leverage, but you don't have to in futures. You're just trading the price. That means you can go long, benefiting from the price going up. So you open a long and then you can close it. Or you can open a short position, which is essentially selling. Now, we don't have any of the asset. We just have USDT in our account. That doesn't matter. We basically just say, I think the price is going to fall, so I'm going to take a sell here and buy back later lower. So that's a short position. It's called short instead of selling because we don't actually have the asset. We don't need the asset. We're just trading long or short on the price of the asset. You have to choose how the cash that you put in your account is used to margin your positions. Isolated up here, that means that each individual position that you open, you have an amount of cash tied up to margin that position, which is isolated from other positions. Cross means that you just have cash in your account and it margins all of your positions at the same time. That means that if some positions are winning, you'll have equity in your account from your profits that can pay for losses in other positions, and you just have a net balance. With isolated, let's say you have $1,000 in your account for a Bitcoin trade and $1,000 with an ETH trade. Now the Bitcoin falls 10%, you're using 10x leverage, so you get wiped out in your Bitcoin trade. Doesn't affect the ETH trade at all. So that's isolated. Beginners, mostly you want to try isolated just to check things out. Cross is a bit easier if you've got more positions all at once. After that, you want to choose the amount of leverage that you take. Now, leverage is simply the position size versus how much cash you have. So if you want 10x leverage and you open a $1,000 position, that means that you're just putting $100 in. If you want 2x leverage and you've got that $1,000 position, then you have to fund it $500. So you can choose that right here. So there's a long and short side. So this is the normal leverage that you take on any position. So let's put this down to, let's say, 2x leverage for long and short. That simply means that I have to fund more of the trade. And then from there, you can choose your trade size and you'll put an amount of cash towards that. When you open a futures trade, choose the trade size and then your leverage you can work out yourself. So if I want to open a market order and I'm going to go long here, so we can switch this between an amount of the crypto. You can choose all the crypto trading pairs up here, right? So I'm going to choose a dollar amount because it's just easier to show. But if you know that you want to trade fractions of Bitcoins or ETH or whatever, you can do that. But USDT, let's say that I want to open $100. That is the trade size that we actually trade and open with the market. Now, if I'm using 2x leverage, that means I need to fund it $50, right? Because we can see down here, the cost to me is almost $50. That's 2x leverage. So I know that this is the trade size. If I change this to 3, 4, 5x leverage, I can keep the trade size exactly the same. The leverage now, I'm using higher leverage, which means on the cash balance, that $100 is a higher multiple of my cash balance. You can see that the cost to me has gone down. So the trade size is the same. I just fund less of that position. And that means that I can now fund an 18% loss before I'm wiped out of the trade, which means that I get liquidated. The exchange is going to say, you're making an $18 loss, you only have $18. We're not going to get into a bad debt, so we're going to, out of your position, sell out, pay off the debt, right? Pay off the loss. So the leverage simply changes the amount of cash you put down to fund the position. 2x leverage, I put more cash in, but the trade size with the market is exactly the same. So I'm going to open that long position. So open, confirm. You can see that here. So we now have this open position. I'm funding half of it, and it's a $100 position. So I can theoretically actually just add margin to this and pay it off, right? Because I've got enough cash to pay the whole position off. Or I can just leave it and say I can now withstand a 50% drawdown. You can see the estimated P&L here as well. So obviously we've opened here, we're in long, so we want the price to go up at certain levels. Now you can see it's wanting me to put a TP in here. TP is take profit. So you can go to the right-hand side when you're entering positions, and you can enter these. Take profit is where you get out of your position at a profit, hopefully. So if we're long, we want the price to go up at some point. So you can choose that here when you're entering the position. SL is stop loss. That's when you get out of your position at a loss to prevent losing more money. So for a long position, you want to put the SL down here somewhere, right? So let's put that on now, like this. So we can add this, add to TPSL. So we're going to put this up. This is our stop loss. You can see the ROI would be obviously minus. So we can confirm that. And that will go through. So now we have that stop loss on. So that's essentially saying if the price gets down here, I would actually take a loss of this. And that's my own loss, rather than waiting for the position to get liquidated if it moves further down. I'm using 2x leverage, which means the position size is 2x the cash margin that I have. $50 cash margin, 2x leverage is a $100 position. I can just pay this off though, which reduces leverage. So down here where it says margin, click this, and it says add margin. I can add 20 bucks of margin, and that just means that the leverage is lower, which means that if I'm 2x leverage now, I can withdraw for a $100 position, I can withstand $50 down, which is 50%. If I add 20 in, then I can now withstand a 70% drawdown. So you can add that in and just pay off the position if you want at a later date. Or you can, of course, remove margin, which is taking cash out of the position. If you're in profits, you can withdraw that margin. Then you have extra cash in your account to do other things. If you want to reduce your position size, then you can close some of the order. Go to the order input screen again. So open is when you open a fresh position. You can open a long, you can add to a long, or you want to open a short, you can do that. Closing is where you're closing positions that are live. So we're long, so we're going to close that long here by going short a little bit of an amount. So I can mark it close any amount. So let's do 50%. I can close the long like this, and that closes out the position. So essentially what it does is takes a short that cancels out some of the long. So now we have a net position which is smaller than we initially got into. You can see the size here has just gone down a little bit, right? So we had $100, now it's 60. So we close some of it, or we can go for the whole thing. So close 100%, close long here. That gets you out of the whole entire position. So you should see that now we don't have any open positions. If you want some more in-depth guides on trading strategies, I'll leave those down in the description. The Phemex bonus link as well, if you're a new user, is down there. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.